Hey guys, how are you doing today? It's been pretty boring for the most part if your sole attention has been exclusively directed to the daily charts, and we will most definitely talk about that. However, we have some really interesting stuff I want to talk about. I want to dissect some more chunks of data with you, and give you some personal thoughts as to what is happening in relation to GameStop in particular in the headlines it has been making. Some of this stuff is related to banks, and it will put some serious perspective on the current state of affairs. It is without a doubt very important for GME investors as well as AMC investors to be well versed in both companies' performances and developments. If you follow me on Twitter, you know that I caught an article pretty much copying and pasting what I have said in regards to GameStop and AMC being the best hedge play for poor market conditions. Though I did not receive any citation or credit for this, though the article is almost word for word a clone of my rhetoric, I am happy that this is finally starting to spread. It appears we might have some media journalists watching this channel, and I am glad that some are wrinkle-brained enough to have a bit of common sense. We are going to go over a variety of articles today touching on this. We are also going to touch on news that came out about a Wells Fargo top executive, illuminating the picture of how these people currently act, so as to get a better understanding of who it is we are betting against, as well as set the stage for anticipation for how they will act after the squeeze takes place. Before we get started, I wanted to thank you guys so much for the general support and love I have seen growing on the morning videos. You guys seem to really love these topics we are going over, and the stories you guys share on the comments really help broaden our understanding of the current economic climate taking place all around the world. Before we get started, let me quickly disclose and state that I am not a financial analyst or advisor, and that all contents discussed in this video are provided as opinions. All efforts are placed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Everything presented is evidence I collect, and all opinions are based on research, experience and knowledge on the matter. Shout out to all my Patreons and one-time donors, whose contributions continue to carry this channel forward. Thank you so much to all that have taken a moment and the burden of throwing some love my way. It means a great deal for the longevity of the channel. With that said, let's get started with today's video. Let's start with an easy subject. The Street recently published an article titled, "How GameStop and AMC stock could be a market hedge." If you have been following this channel for at least over a week, you know very well that this is a rhetoric I have been building for a while here at Simulate and Trade. I have talked to death inflation and the threat it poses in taking a big role in setting up a huge market crash. I have touted GameStop and AMC as being the best hedge, the best protection and defense, against this growing phenomenon and threat that looms around the corner. I talk about this almost daily, and it seems that my channel has gotten through to some journalists. The article published by The Street encapsulates everything in their paragraph that reads, and I quote, "It is reasonable to expect that, in a market correction scenario caused by macroeconomic factors, investors would seek alternative forms of investment. In the case of AMC and GME, price action has been largely determined by supply and demand dynamics, not so much by business fundamentals. Then, why not park some money in these two stocks when the market and the economy weaken? Investing in AMC and GME stocks might be one way to ride positive ape sentiment and sidestep a fundamentals-driven market pullback." Shout out to The Street for publishing something that isn't FUD propaganda and actually uses common sense as well as data and coefficients to prove our point. Simulate and Trade starting to have a small impact on what is being said, what is relevant in the media, has been a welcome surprise. This is all due to you guys supporting the channel and sticking with me. Drinks on me at the moon, ladies and gentlemen. In a surprise to everyone, rumors have started surging, with major media outlets all releasing publications talking about a very possible inclusion of GameStop into the S&P 500. GameStop is currently valued at least 3 times higher than the smallest S&P 500 stocks, due to the rise in prices due to all the people buying it. Now, so-called experts and traders are betting that GameStop could take another leap higher into the grand S&P Dow Jones indices. This is a huge deal, for those unaware and new to trading. This index is very prestigious and has the best stocks in the market. Unlike the addition to the Russell Index, the criteria that determines entrance into the S&P 500 includes much more than market capitalization. It is constructed by a committee of human beings, who factor and weight certain fundamental factors such as liquidity, changes in company structure. It is not easy at all to get a ticket into this index. This is why this upcoming quarterly earnings report is so important and vital to this company. It can literally make this company transition into arguably the best index in the market. GameStop currently satisfies and meet known criteria for the inclusion, such as having a good market capitalization of $16 billion, it's incredibly liquid, having enough shares available to be traded and fulfill the S&P 500's float requirements. I think everything will fall on the quarterly earnings next week on September 8th. If revenue and earnings are high, beating expectations, plus possible announcements and catalysts, we should be in great shape to contend for a spot on the S&P 500. This would be absolutely monumental for our movement, giving us a ton of validity and prestige, forcing FUD spreaders and deniers to have to switch narratives and admit that GameStop is one of the most valuable companies to be in at the moment. I am going to go in extreme detail about this on Saturday's video segment, and what expectations should be, as well as detailing what would change and what would stay the same. All I can tell you right now is that it's an amazing feeling to have a huge position on GameStop at the moment. My friend Nick Ruggia, whose deep due diligence work has helped clarify so many things for me, sent me a link to the consolidated reports of condition and income for JP Morgan. Here on this document, a great deal of information lies. Looking through the trading assets and liabilities, JP Morgan disclosed that they have $135.9 billion in total trading liabilities, including short positions. This is absolutely insane, and let me explain why. In this channel we have popularized the hot potato terms in relation to banks and hedge funds passing the bag of short positions around each other as well as to other institutions around the globe, so that upon inspection, they aren't caught with put positions well above the capitalization of pretty much every institution on Wall Street. We know they trade the bag and constantly move it so as to keep themselves clean. Taking this into account, the fact that JP Morgan has such a massive liability, mostly coming from their short positions, implies to me that something is deeply wrong. It could account for all the recent pictures taken from their buildings with staff working around the clock 24/7. One important thing to keep in mind, and pay very close attention to this, is that banks and institutions pretty much operate the same. Yeah, there are differences to how they assess opportunities as well as to how they handle risk management, but everything for the most part is the same. If JP Morgan currently has a bad sheet showing a dangerous set of liabilities due to short positions, where do you think the statements for companies like Goldman Sachs, Wells Fargo, Bank of America, as well as some hedge funds like Citadel, Virtue and Melvin are? We know they have deep collaborations with each other, since they all participate in MEMX, their own exchange. I guarantee you that their liabilities are similar to JP Morgan's. Keep in mind that this is what is reported, and that the real big and ugly number is being hidden through elaborate schemes. Keep in mind hot potato, the exchange of the liability bags between each other and others so as to not get caught. Also remember that there are plenty more liabilities hidden outside the bag of hot potato. There is no way out for these people, and they can only play and dance for so long before exhausting all ways to get around and consequently getting caught. They have managed to rig the game, and are perfectly functional for now, being able to hide and keep on manipulating markets, with meme stocks being highly targeted. However, this is a huge liability that is going to rain absolute havoc on them once something causes stress levels to get dangerously thin, and if all comes crashing down due to a market crash, it's game over for them. Yesterday, we talked about AMC's failed to deliver data provided by the SEC. Today, I want to zoom in on GameStop. On the recent set of compilation given to us, which accounts for the first half of the month of August, the amount of failed to deliver stocks amounted to 1.3 million. This is absolutely insane because, as it has been pointed out by many, this number is about half the average volume for trading of GameStop in this time period. Now, let me teach you something I learned a little while back. If the failed to deliver amounts to more than 10,000 for 5 consecutive days, you automatically get placed on a threshold list. As you can see so very clearly, shorters are evading this by having astronomical numbers on failed to deliver all grouped around 1 or 2 days, before allowing 1 day to pass every 5 days so as to not get caught and be placed on a threshold list. This is another problem with the poor oversight and regulations that the SEC has. Shorters and market manipulators can easily get around the rules and still accomplish what they want. What is the point of having rules and regulations when you still allow criminals to easily bypass them, and even worse, you barely punish them when they get caught? If you actually get a chart and start putting things together relative to volume, you will see a lot of really weird things happening on the charts. You cannot convince me at all that this stock is not suppressed to the absolute gills of all existence on this forsaken earth. I need a sugar mom to lend me cash to buy more because this is all I want to do. One last thing before we recap today. Ex-Wells Fargo vice president is fighting with the SEC on fake accounts, with silence. Carrie Tolstedt cited her right under the Fifth Amendment to not be a witness in court more than 100 times in a response filed Friday to the agency's complaint. She is a top executive at the center of the company's fake account scandals and is pushing back against claims by the SEC that she took place in misleading investors. The SEC is positioning their case alleging that Carrie made statements claiming Wells Fargo's strategy was to sell existing customers new products they needed, wanted and used, when it was really pushing unneeded and unwanted products and opening unauthorized accounts to customers, which ruined thousands of people's credit scores and as well as put many people in really bad situations. Carrie keeps pleading the Fifth Amendment, noting that it has the right to protect the innocent. Anyone got a bucket so I can puke? Guys, these are the people running the world. You will find no shortage of psychopathic and narcissistic behavior on the boards of these companies, willing to default their own clients' accounts to make a penny themselves. I have no doubt that when we squeeze, and Congress starts calling hedge fund managers and bank CEOs to give testimony, they will all act surprised and shocked, giving plenty empathetic responses for people who got screwed. This is a bit of a personal take, but I find it so ridiculous that contemporary culture likes to view such individuals that exemplify this type of characteristics as dominant or better. These people are clowns. They are parasites that absolutely nobody likes or wants to be like them, and all they do is find ways to trick the system to make a buck. They offer no greater benefit to society, and under a microscope, they tend to become very insecure because beneath all these acts of confidence lies deep feelings of inadequacy. Yes, this falls in line with psychopathic personality disorder as well. I can personally attest to seeing it. Remember that morning video I released last week where Stephen Cohen was very confrontational in the beginning, and upon realization halfway thought he video that he could not manipulate or intimidate the lawyer interviewing him, he becomes very anxious and soft-spoken. His body behavior did a full 180. I am going out of topic here. I just wanted to show you guys who these people really are, and how they act so that nobody here is surprised when Wall Street start playing the role during hearings after the squeeze. Now, let's talk about today. The Fed reported that reverse repo operations for today resulted in over $1.066 trillion, representing a small decrease over yesterday's operations. AMC's dark pool transactions accounted for 65% of the total volume, while GameStop dark pool transactions accounted for 51% of the total volume today. According to Fidelity data, buy order flow for AMC was bigger than the sell order flow, with GameStop's buy order flow also being larger than the sell order flow. Now, let us finish up with a recap of today's performance. AMC has a bullish day, bouncing up from yesterday's dip and gaining a little over 1% today. The stock started trading sideways with a bit of an inclination during the pre-market. It had a dip upon market opening, falling down to 42.37. AMC then quickly bounced up, reaching 44.89. It then retraced before bouncing up again, testing that 44.75 resistance wall multiple times before failing to break it and falling once again to 43.60. AMC then started moving up, closing at 44.38, above the VWAP. As for what I expect tomorrow, the stock has resistance at 44.50 and at 44.90 while maintaining support at 44. If that breaks, we will test 42.64 or somewhere near it before we bounce up. The stock seems to be consolidating, which is the only thing I want AMC to do. I am really liking how it's been able to maintain these high levels. It's very likely that what we are experiencing is a small retracement and that soon we could be setting up for a surge to retest that 48.58 resistance wall. I remain very bullish in the short term, though not deluded to think we can't dip any further. Maintain high hopes and expectations grounded low. GameStop opened to a pretty brutal dip, taking it all the way down to 206. GME then bounced up, making small progressive surges with little retracements in between each leap. It reached 214, a wall that it would attempt to break through most of the day without success. It traded sideways for the most part, building strong consolidation for almost the entire day. It closed at 213.52, above the VWAP. As for what I expect tomorrow, I think it's a bit hard to predict anything. The stock traded very horizontal today, holding strong support above 211 for most of the day. There is a resistance wall at 215 which, if it breaks and holds support above it, would imply that it will test 222 again. If we break support, We are likely to fall back down to 206, and if we break that, then we will go back down to 200 again. And that's all I have for you guys today. Thank you for sticking to the end if you made it this far. Today's video was a bit long, as we covered a ton of stuff. I apologize for the delay on it. Today's big question is life a simulation? If not, what makes you believe it isn't? What proof do you have that you aren't a written algorithm? Let me know in the comments below. I am really interested in knowing what you think on this. Again, thank you to all who watched my morning video and supporting me. I am glad you guys are liking this small series. I got another one coming at you tomorrow in the morning, so stay tuned for that. If you want to help this channel, I have provided links which will be in the description for donations or even a monthly pledge of whatever amount you want. These donations do go a long way in helping me be able to pump videos out. Remember to follow me on Twitter if you haven't already, and I hope to see you guys on the next one tomorrow. Enjoy the rest of your day and to the moon.